The significance, though, of a $2 trillion market cap, beyond just the headline that's going to get a lot of attention, what does it say about what Apple has the power to do that it didn't have 2 years ago?
Yeah, no, that's a great question, John. Look, I mean, 2 trillion is just a number, right? So, I mean, 1.98, 2.02 really doesn't change what the company is. What the company is, it's a platform company. It's built an incredible base of very loyal users. It's looking to monetize that and has had tremendous success with that. We think that, 2 years ago when the stock was in like sub $200, it was of extreme value. And now we're looking at the stock where it's now treated much more like a growth stock. The services story has become a lot more important, is resonating a lot more with people. And frankly, it's been a powerhouse of innovation that's not just on top of devices, but also on the services on top. So there's clearly been a re-rating and a revaluation. We've thought that this would happen. It's happened much faster than I think anyone would have thought so. But that said, this is a tremendous company with a lot of innovation.
Wamsi, to me, the most important strategic thing Apple is doing right now is in the chip space, whether it's developing its own chips for the Mac or the acquisition of Intel's 5G chip business with the expectation that they're going to be able to work Qualcomm out of the iPhone and other devices that need connectivity. Are you modeling that specifically? How should investors think about the potential margin expansion if Apple is successful on the chip front?
Look, this is a very important topic in the sense that gross margins at Apple are probably the one thing that creates the most risk in the story. When you think about gross margins on the product side, vertical integration is one of the things that they can do to potentially offset like significant amount of pressure on gross margins. So let's take an example. If you say that a 5G iPhone is, let's call it $1,100, $1,200, somewhere in that range, and attribute a gross margin to it in somewhere in the low 30s, if you add $50 of incremental cost to the bill of materials just coming purely from 5G, and then for a millimeter wave add another $50, suddenly you're facing about 600 basis points of gross margin pressure. Now, Apple's extremely good at pressuring the supply chain to work with them to lower costs, and they can get maybe $50 out of the system, but then you have still $50 more to overcome. So maybe a net 300 basis points of gross margin pressure that they have to deal with when they come out with the new iPhone. So do they raise prices to offset that? Or can they do more vertical integration? So this is where your point about buying the Intel assets becomes important, right? So every little penny that they can save on the bill of materials helps stabilize that gross margin, because this is technology. Technology is a one-way ratchet in terms of putting more and more and more technology into a product, and yet selling it at roughly the same ASP, sometimes even lower. So you sort of hit this barrier where you got to do other things to be able to offset some of the pressure that you see on the gross margin side. And services is partly that offset, and that's why we're so concerned about any level of services deceleration, because then you don't really have a true offset.
Well, now that we've crossed that $2 trillion mark on Apple's market cap, we're going to have to start asking on whether it's a sell the news event for the iPhone this year, but that'll have to wait for another time. Wamsi, great to have you. Thanks.
Thank you.